Ladies and gentlemen, good day and welcome to the Bank of Maharashtra Q1FY23 earnings conference call. We have with us from the management, Shri A.S. Rajiv, Managing Director and CEO, Shri A.B. Vijay Kumar, Executive Director, Shri Ashish Pandey, Executive Director, and all general managers of the bank. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Shri A.S. Rajiv. Thank you, and over to you, sir.
So, a very good afternoon to all. I am Rajiv. So today we had our results are approved by the Board of Directors, and our results for the quarter ended June 22. It was one of the best results for the current quarter, and number of areas the bank is improved its figures, and the number of figures are actually one of the best in the banking. Our bank's results are concerned when comparing with the past. The total business grew by around 18% to reach 3,36,000 crores. Total deposits up by 12% with 1,95,000 crores. CASA stood at level of 56% of the total deposits. Gross advances increased by 27% to 1,41,000 crores. CD ratio increased to 72%. Gross NBI improved to 3.74%. Net NBI improved 0.88%. Provision coverage ratio improved to 95%. Net profit up by 117% to rupees 452 crores. Operating profit improved to 1,202 crores. Operating profit is 1,202 crores in spite of the bank's, as per the revised accounting policy, depreciation of investments of around 200 crores we have debited to other income account. And another one item, as corresponding to last year, our profit on sale of investments was around 240 crores. this year, because of the market movement, real profit was only 75 to 80 crores. So that also the reduction has happened. And the third point is, last year PSLC certificate bank was able to get around 75 to 80 crore in Q1. This year, because of the market availability, only 2 to 3 crore profit we could able to get it. So around 500 crore reduction.
Sorry to interrupt, Mr. A.S. Rajiv. Your audio is not that great.
I think now it is okay.
Sir, yes, I would request you to kindly, come closer to the microphone and speak.
Now it is okay?
Yes, sir, please go ahead.
Okay. So this operating profit of rupees 1,200 crore, which has come slightly, is not up to the mark. Basically, last year Q1, our profit on sale of investment was around 240 crore, which has come down to 75 crore for the current year. That means almost around the 160 crore reduction in profit on sale of investments. In addition to that, around 200 crore depreciation has happened during the Q1 because of the movement in prices. Second point is that other income is reduced by around 75 crore as compared to Q1. PSLC last year we could able to sell it around 75 crore PSLC certificates, but the current year we could not able to do that because of the market movement. In spite of that, our operating profit was improved to 1,202 crores. That is basically the main core operating profit and increase in net interest income of 20% growth rate. Bank would able to improve the operating profit. And net interest margin improved to 3.28% and cost to income ratio improved to 40%. ROA improved to 0.81 and return of equity improved to 16.75%. CRAR improved to 16.15%, of which Tier 1 capital is 12.16. So these are the major profitability ratios. As regards asset quality is concerned, our SMA numbers are improved a lot. In case of SMA 2, those numbers above 1 crore, it's only yes, 569 crores, of which SMA 2 is 230 crore and SMA 1 is 339 crores, which constitutes only 0.40%. That means SMA 1 percentages of the total gross advances is 0.24 and SMA 2 is 0.16 in case of is 1 crore and above. In case of slippage during the current quarter was 697 crores. Out of that, one account was around 280 crore, one account, single account, that is UP based sugar account. So 100% provision we have made. Barring that, all the asset quality ratios, especially in case of gross and net NPAs, are reduced. As far as recovery is concerned, during the current quarter, around 400 crore recovery has happened. In addition to 120 crore prudential withdrawal account recovery. So the net slippage was around 100 crore was there. As you are aware that during Q1, there will be little disturbances regarding transfers and other things that the recovery is could able to do that. And the current year's recovery targets we have kept at 3,000 crore and we are confident that we will be able to do that. And during the current quarter, some of the big accounts like NARCL transfers or ILFs or like that, some of the accounts were in the pipeline. And we are expecting that this will happen. Around 400 crore recoveries in pipeline in different stages and that will happen during the current quarter. And all other ratios regarding key ratios, all the ratios are improved. And we feel that this is one of the best results as far as the Bank of Maharashtra is concerned. And we will continue to do that. Thank you.
Thank you. Sir, shall we start for the Q&A session?
Yes, please.
Okay. Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Ashok Ajmera from Ajcon Global Service Limited. Please go ahead.
Thank you. Thank you, sir, for giving this opportunity. And at the very outset, please accept my compliments, Rajiv sir, Vijay Kumar ji, and Ashish Pandey ji, and the entire top management team of the bank for giving such fantastic, good results, even in these difficult times of so much of volatility and uncertainty happening around. Sir, having said that, I have got a couple of few observations and some questions. One is, sir, you said about the fresh slippages. That one account of 280 crore, the sugar account slipped and you made 100% provision. What is the status of this account and what are the prospects of recovery in this account and the asset coverage NPV of this account, sir? Can you give some color on that? And then we are having the recovery target, you said, of 3,000 crore. And in the coming quarter, that is the July to September quarter, you said you lined up NARCL and ILFS about 400 crore and some. So still there is a long gap in the remaining 3 quarters. So from where this recovery will come? My other observation, sir, is on the credit side. Comparatively a slower credit growth, and that too, whatever credit growth has happened is more in the corporate. So what are our plans and targets of this? Like our bank having our base being a minimum lower base, we can still achieve higher targets. So what are your thinking on that? And my last question, sir, is on investment losses which we are having now instead of the profits or lesser profits. So going ahead, what do you see in your AFS portfolio? Because you transferred about, I think, 3,000 crore to HTM. But this AFS, what are your views on that, sir? So these are my few questions and observations in this first round of questioning, sir.
Yes, your first question regarding the recovery of that sugar account, I think our recovery GM is here. He can give a color on that.
Yes. This is UP-based sugar account, so that has been slipped this time. So we have made 100% provision on this. So we, in days to come, we'll see that any resolution is possible or we'll take the account to NCLT. That plan has to yet to be decided. So consortium will take a call. But we prudently made 100% provision so that we are protected from future losses. As far as this total recovery target was referred to as 3,000 crore, this is a full year target. It's not a 1 quarter target. And the current quarter, of course, in the next quarter, we expect NARCL to happen because that is long awaited. Everybody knows that. So this time that transfer will happen in this quarter. Island FS already the court order has been given. So that distribution, whatever is realized, is going to take place. Religare is one big account where we expect a resolution. It is already under pipeline. So like that, there are certain big accounts are poised, and our retail recovery is also, we are continuing our efforts. So that way, we are confident that we'll achieve this target.
What I was telling that actually we could able to only recover 400 crores. But this 400 crore, what I was telling in the pipeline, it should have been happened in Q1 itself. Because that was the plan earlier, because money is in the collection account. Only credit has to come or transfer of the account, and definitely it will happen. So this Q1 recovery of 400 crore is postponed to Q2. But Q2, whatever is there, that recovery will happen. So 3,000 crore recovery is definitely it's according to me much more than we will be able to recover that. Number one. And regarding the credit area, what you are talking, our credit growth is around 27% to 28%. I think that will be good figure. I think further it may be difficult to increase that. Even our expectation was that 22 to 24% only it may happen credit. That is the corporate target is given only 20 to 22% credit growth only. And so credit is growing at the rate of all segments about 20%. Of course, in case of corporate credit, it is happened 33% because 5,000 to 6,000 because the corporate is almost 40% to 41% with a band of 2%. That is a more direction. So 4,000 crore only the corporate is grown because that is why the ratio is slightly high. Out of this 4,000 also around 2,000 crore is added basically is a not really big corporate. It is a mid corporate, 100 crore, 120 crore or something between 100 to 150 range, mid corporate accounts. And balance is already sanctions pipeline was there that we have released during the current quarter. So the corporate credit is only, and other growth rates, all segments, for example, MSME, retail, housing, all are growing at the rate of 22 to 25%. So that growth rate will continue. Third point is regarding investments, AFS. AFS modified duration is 1.4. So for the current quarter, our depreciation was 200 crore when the rate is moved around 70 basis points. So as of now, and afterwards we have the portfolio, we have rebuilt the portfolio, and the same modified duration will continue. If the same rate is continuing, this in Q1 the rate was around 7.5253 level. As of now, again 20 basis point rate is already come down. Now we are sitting in positive appreciation only we are sitting. So even if it is increasing by another 25 basis point where maximum market expects, but market as per latest RBI reports and other things, inflation, all these things are peaked. And expectation is there may not be much increase in the interest rates. So even if it is increasing at 25 basis point, bank is protected from the yield. So we don't have any issue as far as AFS is concerned. So I think that this point, anything I missed out?
Yes, sir.
Yes.
No, there was. Sir. Hello.
Mr. Ashok, do you have any further questions?
Yeah. Sir, our CASA overall has come down in this quarter from 1,17,000 crore to 1,09,000 crore. Is it a conscious decision or only because in March it is increased because of certain regions or the government deposits or something that the CASA came down?
It's not a conscious decision because when the CASA, it has come down in case of current account. And you are knowing that there was little instability, the government during that last quarter. Afterwards, this CASA is come to some of the transfers of this transfers from other funds and other things is not happened during the last week because of the change in the government of Maharashtra. Some of the funds was there, it was held up. So those accounts are what our aim is to that average, though it is reached to 58% mark. Average CASA of the bank is we are keeping 56 to 57%. So average CASA is more important than the terminal figure. So our average CASA is above 56% as of now also. So today also CASA is around 56.5%. So as far as CASA is concerned, we are very comfortable. And there may be small shift from SB account to because of the rising interest rate scenario. Small amount, 1,500 to 2,000 crore is shifted from SB accounts to other term deposits area. It has happened in some of the rural areas. But this percentage is continuing at the same level. And that will happen during the current year.
No, sir. That is, of course, the compliments to you for having one of the largest amount of the CASA, among the public sector banks. Only in one quarter I had observed some fall. That is why I asked the question.
No, sir, one thing is very clear that we are also very cautious that any bank keeping at the 50-60% CASA is likely difficult that. So what we wanted something above 55%, that is sufficient that. Because we also know that it may be if you reach to 58, 59 in the competitive world, because keeping the CASA at the rate of, it may be slightly difficult. So the average CASA we are keeping at above 55%. But we will strive hard for improving further that.
Yes, sir. Point well taken. My last question is, sir, on Nbfc Exposure. I think your Nbfc Exposure is only 6.23, comparatively very low as compared to other peer banks. So what are your views on Nbfc credit, direct credit for onward lending and also on the co-lending front, sir?
So direct lending, and that is a cautious decisions where we have taken by the board. Last year, one or two NBFCs having little difficulties. So that time, board is taken a decision back to exposure, and when we are able to, bank is more concentrating on mid-corporate and MSME sector. Mid-corporate is a major area where looking after some sectors, board is given some kind of direction, some hospital sector, pharma sector, and some kind of manufacturing sector and infrastructure, some of the areas. So NBFC, we will continue to lend, but in a cautious way, selective basis, based upon the fully rating. Because as per the internal policy, AA and above only, and pricing also we may have to see for NBFC lending is concerned. Otherwise, there is no problem in NBFC lending is concerned. Our all assets are very good. There is not be any problem. So since that other areas are growing, so we have not gone very aggressively. It is true that not gone very aggressively in this sector.
Okay, sir. Thanks a lot, sir. I will come back again next time for this. Thank you, sir.
Okay, thank you.
Thank you.
The next question is from the line of Maruk Adajania from Edelweiss Securities. Please go ahead.
Yeah, hello, sir. Sir, congratulations. I just had one question on your loan growth. Basically, your corporate loan growth has been strong, like Mr. Ajmera also mentioned. QOQ sequential loan growth is 8%. So what are the segments or the sectors that have seen this pickup in growth?
In this corporate growth, mainly some of the airport assets we have taken. In addition to that, some infrastructure also we have taken, and in NBFC small exposure is there. Some exposure, since the industries are doing well, some small exposure to steel, petrochemical, metal industry, we have taken the exposure. And textile also, we are very keen on taking some exposure. There also we have taken some exposure. So overall exposure in the corporate is a mixed bag. Not only on one sector we have gone, we have a diversified portfolio. And one more thing which I would like to inform, that our overall rated investment grade rating exposure has also improved. Earlier it was 43,519, which has increased to 44,242. And similarly also the government guaranteed advances, which was 10,857, has increased to 11,446. So our book is granular as well as well-rated book and well-guaranteed book. This is the composition of our portfolio.
Got it, sir. Sir, and what would be your incremental loans to airport this quarter?
Sanction amount is around 1,300 crore.
Okay, to airport during this quarter?
Yes, ma'am.
Got it, sir. Got it. And sir, in infrastructure, what? Would it be roads or in general?
It's a mixed bag. Even in infra, it is road also is there. Other infra is also there. Some of the water projects are there. Then affluent treatment plants are there. Namami Gange project is there. So mixed. It's not any concentrated to any one infra. All mixed infra projects we are taking.
Right, sir. So there's I know this may be a difficult question to answer, but there's a lot of talk and media reports on M&A in state-owned banks. Do you think this is a far-fetched idea, or it could actually be a possibility, given your experience in the sector?
Can you repeat, ma'am?
No, so basically there are a lot of articles in the media of state-owned banks likely to be
Ms. Farooq,
privatized.
sorry to interrupt. I would
Yes.
request you to use your handset while asking a question.
Okay, let me
You
do
are
that.
not audible.
Yes, yes.
Thank you.
Yes. Hello, can you hear me?
Yes. Please proceed.
Hello, can you hear me now?
You're audible. Please proceed now.
Hello?
Yes,
Hello?
please, madam.
Ma'am, you're audible.
Yes,
Please
yes,
proceed.
yes, yes. So I just wanted to say my question was that there's a lot of media reports on privatization of state-owned banks, stakes in state-owned banks likely to be sold to private players. So any feedback on these articles?
There is no feedback, madam. I think only we have also seen only media reports.
Okay, sir. Thank you so much. Thank you.
Thank you. A reminder to all the participants to press star and one to ask a question. The next question is from the line of Ashfaq Ahmed from A Square Financial Services. Please go ahead.
Yes, my compliments to MD sir, both the ED sirs and all the general managers sir, because the kind of outreach program that we have conducted, I believe it was completely unparalleled. So my compliment to the entire Bank of Maharashtra team who has been on their toes, which we have seen in the last 4 months, and which is reflected in the numbers. Just a small question I have, especially on the digital initiative that we are taking actually, because still I believe some teething problem or some fine tuning is needed to be an enabler for the users. So just wanted to understand what digital initiative our esteemed bank is taking on that front, sir.
Yeah, am I audible?
Yes, sir, you are audible, sir.
Yeah, thank you so much for the all compliments. Yes, on the digital initiatives, bank is working on the two pillars. The one is, on the customer journeys, where the digital footprints are there. So if you see particularly our the analyst presentation as well, so at least 4 to 5 parameters like, the QR code and the transactions in the QR code. Even if you see on the WhatsApp, the increase in the onboarding of the customers on the WhatsApp as well as on the mobile banking. Particularly if you see the transactions which has happened from quarter to quarter on the mobile platform. You see, it indicates two important things. One is it is reducing my operational cost. The second, it is giving a very...
Hello.
Yeah.
Sir, your
Yes,
audio went. Could you please repeat what you were saying, please?
Yeah. So I am just repeating that bank is working on the two pillars. One is on the customer journey. So the transactions, like if you see the first quarter transactions and the onboarding, which is already there in the presentation, I think last the fourth and the fifth slides from the last. So that is on the one part bank is now working. The bank is building the STP journeys, total end-to-end. No bank is having the STP till in principle and furthermore. But second, the bank is also looking to strengthening the internal, the processes and systems. So this is the second journey which is bank is looking into. Now the third part which bank is looking on both the side, which will help the bank to strengthen its own internal system efficiencies as well as customer journeys onboarding fintechs. So almost many of the fintechs are evaluated as per the policy adopted by the bank. And there are few areas like, artificial intelligence or the voice AI or maybe, the bringing AI into the underwriting STP part. So bank is working upon that. The purpose of intervening the technology into the bank process is only two. The first is to give a more convenience to customer and at the same time reduce operational cost. The third, very importantly, to build in the compliance during the journey itself. So these are the three priorities which bank is looking forward in the current FY or so.
wanted to have one view. Like STP is that we are implementing. Sorry to take a couple of minutes actually. So STP will be primarily for the renewal of the existing accounts, as well as it will get implemented in trade finance as well. So because one of our peer bank has already at a very advanced stage of implementing, or they have implemented also.
See, the building of the STP involves 2-3 factors. The one is your own integration of internal and external database. The second is bringing into your appraisal process. Now, the third thing, the policies which has to be built in with the bank own PD and LGD. So with these 3 pillars, any bank would first like to, do the beta testing with the review renewal. So our strategy is also the same. We will deploy and do the back testing with the review renewal case within the existing portfolio. Then certainly, now because account aggregator is going to be in place very, very soon, your Jan Samarth is going to be in very, very place very soon, and certainly the low ticket size is also increasing in the market if you see. So going forward, this digital lending platform S2P, STP end-to-end is going to be the key area and focus and the backbone of the bank.
Thank you so much for answering my questions, and my best wishes again to MD sir, both the ED sirs, general managers, sirs and madam, and team Bank of Maharashtra. We have been bang on in the last couple of quarters continuously, and my best wishes to you for the future quarter as well, sir. My best wishes to the entire team Bank of Maharashtra, sir.
Thank you. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. The next question is from the line of JK Jain from JK Jain and Company. Please go ahead.
Yes, congratulations on the very good set of numbers. Actually, I had not seen this is the first time I had seen your numbers. In fact, the numbers for the year ending March 22 was also very fantastic, because on the ratios, if I see that your net NPA was just less than 1%, this time it is hardly 0.88, and your provisioning is also 600 crore, and the net NPA is right now is only 1200 crore. So it means if you carry on this provisioning in this same system, your net NPA will be 0 by the year end. If I am correct or no, as a layman, please clarify me. And another thing, you have said that there will be recovery of 3,000 crore. So that 3,000 crore means that is the gross recovery. So out of that 3,000 crore, what amount will come to your kitty? So that is, as a layman, if you can clarify this, so it will be a good thing. And another thing is there is a good amount of tax provision of about 200 crore in this quarter itself. The bank must have brought forward losses. So how this 200 crore tax provision for the quarter as well as 800 crore for the year ending March 22 was made? Kindly clarify.
So this first question is regarding the recovery. Recovery this current year also we are expecting at least 2,000 to 2,400 slippages for the current year. Because on an average we are expecting around 500 to 600 crore slippages, new slippages for the current year. And the recovery will be around 3,000 crore. The net kitty will come maximum 500 to 600 crores. So the reduction will come. Second point is that regarding taxation, 200 crore what we have made is we have enough, because the last March we have switched over to new tax regime with the 25%, and the next 2 to 3 years we may not be requiring any taxation provision for the year. And this is where we have done that we have little more profit is more, so we have given 200 crore for DTA reversals that, because the bank was earlier around 600 to 700 crore loss DTA is created. Out of that, last March we have already released some around 150 crore. So 200 crore we have released for the current quarter. So this is the position that. So in future, for the coming quarters, this taxation provision, another 300 to 350 crore loss deferred tax assets is there, that we will release that. And one point is that when we are able to release the deferred tax assets, it will improve our capital adequacy ratio without raising for any capital. So you can see that in last quarter, 16.45 was the, after declaring dividend, it was 16.45. And in spite of 5,000 to 6,000 crore addition of these advances, we could able to keep the capital adequacy ratio of 16.15. So for keeping the capital adequacy ratio, we may be, these deferred tax assets, we may have to write up. I think these are the two questions you have raised.
Yeah, this is the question. So that means going forward.
One point I not told you, that regarding net NBA. Net NBA is 1,206 crore is a net NBA figure. So we need not wait for next year for write-off because we have already 1,200 crore COVID provision is kept for that. It is not charged with the floating provision we have kept and we have not returned back. So any point of time we may be able to utilize that 1,200. In fact, as of now we don't have any NPA at all because if you consider that 1,200 crores, it's a fact.
You mean to say 1,000 crore is the excess provision?
1,200 crore last year we have provided for COVID provision. That is continuing that. That is not that. Yes.
That means the bank, whatever the result is being shown, the bank has a very rosy picture, if I am not wrong.
Yes.
Because that's my feeling, because I have not seen any bank, any PSU bank or even the SDFC, their net NPA is something like 0.4 or 0.5, and the CASA ratio, I think you have the highest CASA ratio. Even the SDFC is near about 50%. So how the share? Well, that's not the question. The question you can give a reply. How the share price is just 2 times of the face value? That's a little perplexing. It looks as if there is something beneath it, or we are not able to understand, or things like that.
I think generally you see share price and book value, all these things, and generally investors will look into that, the consistency and other areas. I think we are also the same opinion like you, that in future I think things will improve.
Okay, sir.
Yes.
Thanks a lot.
Thank you.
Thank you. Participants want to ask a question may press star and 1 now. The next question is from the line of Sri Sankar from InCred. Please go ahead.
Yeah, I've got a couple of questions. My first question is, your cost of deposit has seen a sharp decrease. That's during an environment wherein things have been moving up. What is it leading to? Is it because of your sharp jump in your current assets?
Whether you can, sorry that I could not able to, cost of deposit is decreasing. But one of the main reason is that CASA ratio is one of the major reason. And up to last year, it was reducing interest trend, and Q1 is likely the deposit cost is increased. So there is a large effect in case of deposit is concerned, and slightly.
Sorry, sir. I'm not referring to last year. If I look from December 21 onwards, which used to be at 3.69, has sharply reduced to 3.46. The last 6 months.
Yes. Cost to income we are talking, sir? Yes. Cost to income mainly.
Not cost to income, sir. Cost of deposit.
The cost of deposit is the share of CASA is increased. You see that it has gone up from 46% to 58%. Around the 10 to 12% CASA ratio is increased. Out of that, the main increase is happened in case of current account. So current account is we could able to raise government funds and other current accounts, good corporates also. The current account growth for the past 2 years, it was around 15,000 crores. So that is zero interest rate, and around the 15,000 crore SB also our interest rate is only 2.75, so one of the lowest. And we don't have any differential deposits and only 4,000 to 5,000 crore deposits, all retail deposits above 2 crore without differential deposits, bulk deposits we are having. But bulk deposits also interest rate is much below the card rates. That is the reason for keeping the cost of deposits.
Your sharp increase in current account, current deposits, etc., and the CASA part, how much you think is going to be maintainable, and how much will not start to deplete? That was my first question. Second, your yield on advances also have moved very sharply. But the NIM, if I actually look at it, it has not seen a significant increase in line with the kind of increase in your yield on advances and the decrease in your cost of deposits. So I'm trying to figure out where exactly that has gone. And I'll ask my questions fully and then you can answer, sir. The second part is, we have also seen a sharp growth in your credit outlook since advances. How much is the growth that is sustainable for you as a bank over the next few quarters? And that's my question, sir.
So CASA sustainability is around the 55 to 56% will be the sustainability. And credit outlook sustainability will be at any cost, we may be able to grow at the rate of 20 to 22%. And regarding the NIM, what you have referred, NIM is a combination of not only the yield on advances, it is investments also. Because our 40 to 45% of, if you see that, yield on investments has come down by around 60 basis points as corresponding to last year. Though the yield on advances is increased by 50 to 60 basis points, correspondingly around 45 to 50 basis points yield on investments has come down. That is why slightly this has affected the NIM. So going forward, this investments yield, it may continue like this or it may increase by 10 to 15 basis points, but we will be able to continue this yield on advances same way, and we will continue the NIM above 3.25 range. That is our plan.
Okay. And you think the advances should grow around 20% plus?
20 to 22% is our target is kept, because the situation as of now our growth rate is very good. That there is no doubt in that case. But the conservative approach is 20 to 22%. It may go up to 25%.
Okay, fair enough. And the next question is on your SMA, sir. And you have given the SMA numbers as extremely low SMA numbers that you have. At 569 crores, SMA 1 plus 2. This is for accounts which is 1 crore and above. Can we get some color on the SMA figure for the lower number, the other less than 1 crore?
Yes, you can talk.
Yeah.
As our general manager monitoring, Sanpal will give you the numbers.
Thank you.
Our SMA 1 and 2 position for in absolute term for June 2021 was 4,637, and though in absolute term it is increased from 7 in percentage in 7.16 and quarter on quarter basis, but YOY it is improved 10.16. The YOY figure for June 22, it is 4,166. So improvement is there.
That is SMA 1 and 2 put together. Can you give me the breakup, please, sir?
Just a minute. Below, you are asking for below 1 crore, no? This is including the SMA below also. So below 1 crore, our figure at present we don't have, we will give you.
Okay.
Yes.
Okay. Thank you.
Thank you. Participants who want to ask a question may press star and 1 now. The next question is from the line of Dikshit Doshi from Whitestone Financial Advisors Private Limited. Please go ahead.
Yeah, thanks for the opportunity and congratulations on a very good performance. I have three questions. Firstly, can you give any guidance for the credit cost going forward? My second question is, if I see your other operating expenses, that has come off very sharply. I mean, almost 950 crore was the average for per quarter last year, and in this quarter it is only 800 crore. So, what was the reason, and is this 800 crore is sustainable, or will come back to over 950 crore? So that's my two questions.
So this operating expenses 940, and this quarter 800 crore coming down because in case of AS15 valuation, because of the increase in bond rates, it has impacted around 50 to 60 crores. So otherwise, I think it will continue that. Around maybe.
I'm sorry, sir. Could you please repeat? Could you please repeat that? Because your audio went off in the middle.
Okay. In case of operating expenses, last year it was around 950 crore for the corresponding last quarter, and this quarter is 800 crore. This 800 crore is slightly come down because of the AS15 valuation has slightly come down for the current year because of increase in bond rates, because that investments of the yield on investments of the AS15 has slightly improved. So this has reduced by 50 to 60 crore. So it is not going to much impact on this. Maximum it may be around 75 crore difference may come. So otherwise there will not have any impact. Credit cost is concerned, this quarter for going forward the credit cost will come down further because we for reducing that net NPA this year additionally 250 crore provision we have made. So the coming quarters that may not be there, but around so the remaining credit cost will continue that.
Okay. And my last question is regarding the capital requirement. So, looking at a strong profitability and capital adequacy at almost 16% plus, are we looking for any raising of capital this year?
So, Honorable Board and AGM is already permitted up to 5,000 crore umbrella. Permission is already given for raising capital. All the kind of equity, tier 1, tier 2, all these things. So as of now, at present, our position is comfortable. And additional 1,200 crore COVID provision also we have not computed for the capital adequacy purpose. That also is eligible. And the current year profit also, comparatively in future also, we are of the opinion it will be good. So, and above 15% capital continuance is the board direction. But however, looking at the situation for the current year, if it is requirement, we may be able to raise some tier 2 capital or tier 1 capital during Q3 or Q4. So equity also, if the situation is good, means maybe 500 to 600 crore, we may be able to raise that. Because tier 1 common equity, if it is coming down, because of our growth rate is coming 20 to 25%, advance rate is growing. So we may be required for the current year, we may not be required any capital requirement, but in future, 23, 24, 24, 25, we may require some common equity, even if good profitability comes also.
Okay, my last question is, so as you have pointed out that we may not require the capital in the near future, pure equity capital I'm saying. So our, President of India holding is almost 91% in our company. And as per SEBI, the promoter holding requires to be below 75. So do we have any exemption, or if you can broadly, or maybe government looking for OFS at some point of time, any idea you can give?
Yes, that is already extended. I think up to 23 October is given the permission, and as and when it is required, they will give. Usually, you are also aware that every year, one year extension, they are keep on giving that. So we expect that will continue.
Okay. That's it from my side. Thanks.
Yes.
Thank you. Anyone who wishes to ask a question may press star and 1. The next question is from the line of Ashok Ajmera from Ajcon Global Services Limited. Please go ahead.
Oh, thank you for giving this opportunity again. Sir, I have got some some questions. Sir, this NARCL, now the things are getting now clearer. And I think we had worked out those numbers about a year back, that how much, 9 months back, that how much will go. Can you give a fresh, color on the, what is our status in ARCL accounts? Like total, how many accounts are identified and how many are going in the first tranche out of the 50,000 crore of this thing? Can somebody give a little more color on this NARCL, sir?
Yes, our GM recovery will respond that.
Yes. In the first list of 50,000 crore, we have 3 accounts shortlisted, around 660 crore. So that will be going in the first list.
And what is the overall initially that earlier assessment was made for the, first tranche of 2 lakh crore, which was given the figure. In that, what is our status, or we are still standing on the same old number only?
See that discussions are going on. They have finalized only the first list of 50,000 crore. So as and when this is over, then the next tranche will come. Then again the discussion will take place.
Okay, so even if suppose it is say 20%, 120 crore, and out of that 15% cash. So we will get about 20 crore, 20 crore something when this 660 crore materializes, isn't it? Which will come directly in the income.
The cash will be that, and another SR component, that is government guaranteed SR. So that is as good as cash for me.
Sir, still there is a doubt whether you will take it as an income or a discounted income, or anyway, that's a different issue that we will, of course, this is for the entire banking industry. And sir, this just one a small observation. I observed in the expenses when we are looking at the expenses, this schedule, this your slide 8, that you have made a provision of audit fees for 8 crore rupees only in one quarter, this quarter. So out of the total 17 crore of audit fees last year in the entire year, 8 crore is made only in June 22, in one quarter only now. So is it going to be like almost a 50% increase in the overall audit expenses, or it is one of some provision has been made?
It is some kind of provisions only. Sometimes you see some of the heads, round figure, they will give some provision. So when the profit is good, then some provisions may happen in some of the sets.
Because 8 crore looks to be in one quarter little higher number. Generally it used to be 4-5 crore per quarter. And overall in a year is around 17 crore. Last year it was. So
that some portion may take care of the current quarter also, audit fees. Yes.
And sir, this NPA provisioning of 637 crore, 280 crore you said is the 100% of from that on the sugar account. That entire 280 crore has come in this quarter only, or there were already the provisions made earlier on that?
No, that was a restructured account. Some 40 crore was earlier restructured was there in standard, that is reversed. So next was around 240 crore additional account.
In this 637 crore?
Yes.
And sir, this additional buffer provision which we are having, you said of 1,000 crore. What are our plans to in the current now next 3 quarters? Are we going to? Do you see that it will be required looking at the current situation, or you will start taking the benefit of that by reducing the provisions in the future quarter?
That we have around 3,800, 3,900 crore restructured book is there. For that purpose only we have kept it. That you may be knowing that 10% provision is already made in the books by restructured account as per regulatory. So last 2 years there was some confusion in the market that whether this
voice is dropped, sir.
Sorry, sir. Ladies and gentlemen, we have lost the line of management. Give me a moment, I'll connect them back.
Hello.
Ladies and gentlemen, we have the management connected now.
Yeah, the voice was dropped. I think the line was dropped. Yeah.
So this COVID provision for 2 years where we have given because of the restructure, we have restructured around 3,900 crore totally restructured portfolio. So it is a cushion provided for this restructured portfolio for this 1,200 crore. As and when this restructuring portfolio is coming down, then we can able to utilize that provision. That it's a conscious decision taken by the management.
Okay, sir. Sir, on this entire NCLT, list 1, 2, okay, almost 100%. But overall, the NCLT referred accounts and the admitted accounts, how much provision are we having with other banks and consortium also all together NCLT? What is the
100% provision is already been done in NCLT cases.
All NCLT cases.
Yes.
Oh, that's great. And my last question, sir, is that on the CD ratio, that we have improved our CD ratio to 71.75%, I think, from 66.85 in the last quarter. So how far you can go? I mean, as per your plans, if your credit growth remains the same, and deposit
March end we can go up to 75, and our aim is to reach a minimum 80%.
Very good, very good. That's great, sir. Thank you very much, sir, and all the very best. Thank you, sir.
Thank you.
Thank you very much. The next question is from the line of Sri Sankaran from InCred. Please go ahead.
Sir, one update on you mentioned about 4,100 crores of SMA 1 and 2 accounts of less than 1 crore. What is your expectations of slippages? How much is the slippage that you expect from those accounts?
Sir, SMA 1 and 2 below 1 crore figure is actually not available at present with us. So I think it was misconstrued in the last slide. So we'll come back.
This SMA 2 figure as of today, it is around totally 870 crores is there, including all figures as of now. As this is today's figure, what I am talking. 872 crore is there SMA 2, and SMA 1 is around 1,700 crore is there as of now. So this figure 872 crore is actually even, it is not even coming even below 1% is coming actually. So what we wanted to tell that this is a comfortable position for the bank as far as the SMA is concerned.
So point taken. My question is, I'm not disputing the fact that it is not comfortable for you. It's comfortable. It's quite enviable to be in that position. But what I'm asking you is, from your estimate, what is the expected slippages and what is the credit cost? I think somebody asked the question earlier. I missed it. That you expect overall from this overdue account. That's my question.
Yes, expected slippages 500 to 600 crore per quarter is our expected slippages.
Okay, 500 to 600 crores per quarter. Thanks, really appreciate that. And credit cost?
Credit cost, it will be around 1.2 to 1.3% annualized.
Annualized 1.2 to 1.3%. Okay, thank you very much. And one final request, sir. If when you put the results also, it will be great if you can put that presentation also on the exchanges. That will be great. Not only on your website, please on the BSE and NSE as well. Thank you.
Okay, sure. We will do that. Yes.
Thank you. As there are no further questions, I would now like to hand the conference over to Shri A.S. Rajiv for closing comments.
Our Executive Director, Shri Vijay Kumar ji, will be the closing.
Yeah. Thank you, MD and CEO, Sir Rajiv Sir, and the ED, Ashish Pandey ji, and my general managers. Thank you very much all the analysts for sparing your valuable time. Quarter after quarter, we used to have, besides whenever we come for QPR and raising of funds, you all are always supported. On behalf of Bank of Maharashtra, I would like to say a few words. if you look at the last 2 years, our last 8 quarters or 9 quarters, consistently on top line growth, as well as all the ratios in terms of quality, quality of assets, and in efficiency, profitability, and every parameter, Bank of Maharashtra has been posting a healthy ratios, which has come from the support of definitely from the customers and workforce, and of course the media and analysts. On behalf of the Bank of Maharashtra, I convey my sincere thanks to each one of you. Some of the questions you posed, when the ratios and business growth is very fine, how the market is not taking into account and your share ratios. And the analyst has to come out with the positive report on us. So that I think that will also help us improve the market share. This is what I appeal to you. Not only the overall growth in government everywhere, and as a public sector bank, we are very much conscious about the national building and the priority sector. There was no question about anything about our priority sector lending this analyst, but in those areas also we have done extremely well, and we have been conscious about the Government of India schemes, which this current year also we are focusing it. Perhaps very few banks in the public sector continuously getting award from all the state government and central government. Recently we got a coveted award from none other than the Honorable Prime Minister for MSME growth for the last year, and SHG growth from the Maharashtra state government through the NABARD. So on behalf of Bank of Maharashtra, once again convey my sincere thanks to all the analysts for participating and your support. Thank you very much.
Thank you. On behalf of Bank of Maharashtra, that concludes this conference. Thank you for joining us, and you may now disconnect your line.
Thank you.